Hi, this is Randy Finney with Right Side of the Chart, and today is Monday, January 22nd, 2018. I wanted to do a quick video on the utility sector. I've had quite a few inquiries from on individual utility stocks, my opinion, including a couple today, Duke Energy, Southern Company. These As you guys know, I was recently and still am bullish on the utilities, looking for at least what I refer to as a tradable bounce. Now, let me expand on that term. When I say tradable bounce, what I'm referring to there is not a bounce lasting a couple days or going a percent or two, looking at the intraday charts. I'm talking about a trade a bounce that you could swing trade. Now, some of the trades on the site, a lot of the trades I look at and setups are explosive, and we're looking at targeting double-digit gains, sometimes triple-digit gains on a lot of stocks. Utilities are your steady Eddie companies, so everything's relative. And a tradable bounce in utilities could be, 3, 4, 5, 6, 7 percentage points. And I'll share with you my thoughts on where I think this one's probably going to go now. Let me just talk a little bit on this chart. This is the utility chart, the daily chart. You can see, as you guys know, I like to swing trade these divergent highs, look for divergent lows. You can see in the red divergent high right here. And I'm referring to the divergences down on the indicators. This one fell off. It was to the left of the chart. So you had bullish divergence or positive divergence down here at the low. You get a rally, little consolidation period. That rally continued. Divergent high. You can see the correction. So this is self-explanatory. And I should have marked up here. We had a divergent high here as well, right there, and hence this correction that we're in right now. And this is a pretty tough correction. Reason being, I believe, is twofold. Number one, although it's been well, announced, the Fed's finally embarking. Well, they have already started to for a while. Gradually increasing rates, and everybody believes rates are going to go up. And I think this is more so a flight out of these relatively safe, steady Eddie investments because right now anything with a ticker, especially the more aggressive it is, these cyber currencies are running up, marijuana stocks are running up, just anything in the ticker, any equities, just about technology, you name it. It's a broad-based rally in the stock market. And it's, by some accounts, we're in a melt-up mode. The markets, when you look at a daily chart, have gone parabolic since the first of the year. It's only been a couple weeks, nothing to get too excited about. We're about 3 weeks into the New Year rally here, but either way, so what you're seeing is nobody wants to own boring utilities, but they do, however, want to flock to these stocks during times of market turbulence, especially when the economy slows down. Utility stocks are what's known as defensive issue companies. In fact, they're the king of defensive issues. What are defensive issues? Well, when the economy turns down, if we're in a recession or an economic contraction, most companies' profits suffer. However, you don't stop paying your electric bill, your water bill. So utility companies continue to their revenues are pretty much unfazed by the economic cycle because that's the last thing you're going to stop paying is your electric bill. Other defensive issue companies are, alcohol, tobacco. People don't quit smoking just because the economy's down, and if nothing else, they drink and smoke more. Anyways, enough on that. That's what utility stocks are, and they're out of favor right now because everyone wants growth stocks. So number one, that's been priced in. This is one of the sharpest corrections, as you can see here. This is a 2-year chart, one of the sharpest corrections that we've had in years. We are down to support. I believe I had an official long here, tried to catch it here at the support zone. I thought we might reverse there. It was a pretty well-defined support zone. However, we sliced right through it. It's what I call a momentum-fueled overshoot. We had this little bear-type flag action here. And although technically the flag measures a little more, I feel pretty confident we're going to catch support here. And at this line, it's about 49.80, give or take. You can see going to the left, you can see the reactions on this line. There's a reason that that line's placed there. So that's that as far as price action goes. And down here, as I pointed out, this is the most oversold we've been in many, many years on utility stocks. Not just how deeply oversold, the RSI came down around the 22 and change level there, but we've been oversold for an extended period of time. So a snapback rally We all know that's coming. Stocks, securities, indexes, the market, it's like a rubber band. The farther you stretch that rubber band, the more likely it is to snap back. You can see the PPO starting to curl up down here. That's a momentum indicator, poised to make a bullish crossover. So, with that being said, I still expect a bounce. Could be a more lasting rally, but at least a tradable bounce. Let's jump over to the 60-minute charts. This is the falling wedge I highlighted recently. We had a little false break here, and we can move these lines if we want to try to, capture that now. Remember, the markets are dynamic, and so is my analysis. Just because I had a wedge here before, as time goes on and that trend line is violated, I might go ahead and try to fit a new trend line there. But either way, that looks like the utilities are trying to pound out a bottom here. That red line disregard, I think that was a stop on the previous official trade. But now you can see targets here. 51.12. I have some reactions there. I think that's where we bounced to. And this was a swing target on the previous trade, and I still think we get there. So to measure it out from where we're at now, that's about a 4.7% bounce. And again, that's what I call a tradable bounce. At this point in time, that's all I'm looking for. That's all I plan to hold. I have some utilities in a lot of my longer term accounts, and I think that's where we go. There's a potential for more, but let me show you a few other things. Before I leave this chart, remember, I really like to position for a trend trade. Trend trade is like a longer term swing trade, a trade that's expected to last months, go well into the double digits, could actually last years. This would be a trend. If you caught this divergent low and you trend traded all the way up here to the highs, yeah, there were several divergent highs. That's sometimes the hard part is where to get out, but that was an uptrend. Um, Now let's flip over to a chart. This was an inquiry I had, and I'll wrap it up with just this one stock. There's a lot that I've covered lately. Some are official trade ideas right now, but member January 2018 in the trading room asked my opinion on SO. That's the Southern company. We're going to flip over here. This is a 2-year daily chart. Every candlestick is 1 day's trading action. This is a 2-day period chart. So now we're going back 4 years, and every candlestick represents 2 days of trading activity. All right, so what we're looking at, I do have a support line. It's not very well defined, but I see some reactions here, reactions back here, sort of a support zone. But a couple things stand out to me. Uh, just like the rest of the utilities, this one's very oversold. In fact, you can see here, by far the most oversold this stock has been in at least 4 years, and I imagine if we go back longer. And again, all we have to do is go back in time. Let's look at what happened every other time the stock was oversold over the last few years. This time we did have a bounce, and this is what I wanted to get at. So when we look at this stock, we look at the drop that this one has had in just very short order. If you look at the pop-up box to the left, down towards the very bottom, it tells me this drop was 2.5 months, 2.6 months, and the stock fell 17.34%. That's a very big drop, and as you can just see visually looking at the chart, that's the only other time we've ever seen anything like this in the last couple of years. Such a sharp slide in short order was this drop here. Now, when I talk about the potential for a bottom in the utility stocks, but at least a tradable bounce, that's what I'm looking at now. So let's use this example here. Again, this drop almost mirrored that. I mean, perfectly. We're right at right around the same level. If I put the crosshairs here, you can see we're just a little higher when we started here, about 50 and a half, or 56 and a half. Here we're a little over 53, and we have a nearly identical slide down. Let me give some arrows here. I know I'm talking fast just in case you're not following where I'm looking at on the charts. So there it was, 2 virtually identical drops. And now, as you guys know, if you followed me for a while, one of the things I really like to see for a swing trade and especially a trend trade is positive divergence. So what we had here is the stock was very oversold. In fact, up to that point, the most oversold it had been in a while. You can see I circled that reading. And it did bounce, and we got what I call a tradable bounce. Here, you grab that line, and the stock bounced to measuring it out, same pop-up box on the left. That was about a 4.5% bounce in just 8 days. So You could definitely, to get 4.5% in a week, that is comparable. If you were to, extrapolate that out, you do that times, four, you're at nine, there's 18% in a month. Again, assuming you're doing, I'm not saying you're going to get that each and every week, but you annualize that number out, and that's really good. And this is what I call velocity. This is swing trading. I'd rather get 4.5% in a week, get in, get out, redeploy those funds elsewhere instead of having it tied up than putting it in a swing trade that might, last for 3 months that I'm trying to get 10, 12% on. So this is swing trading, and this is what I call a bounce trade. And that 4.5% bounce about meshes with what I just showed you my target was on XLU, the same bounce. Now, going back to where we're at now, we do not have positive divergence. We are deeply oversold. I can tell you this, whether it's now, whether we go down another couple percentage points or two, there's going to be a nice snapback rally in the utilities. I highly suspect that is going to come along with a correction in the stock market. We've had this explosive rally since the beginning of the year. Valuations are extreme, and most importantly, we're very overbought. Bullish sentiment is at extremes. So we're going to have a pullback, and it's probably going to be pretty swift because when you have momentum type trades, momentum investors piling in, when those momentum investors sense that the ride is over, at least for the time being, they get out quick. So what I think will happen is the stock market will pull back, and at the same time, you'll see a flight to safety, especially with the institutions. They're going to look to move that money, pull some money out of the market after this run, and it's going to find its way into safe money or beaten down investments with a little downside, and that'll be the utility stocks. So whether or not the two are concurrent, the correction in the broad markets and the bouncing utilities, I do feel pretty confident that a bounce is coming soon. And another way to say it, I think the downside risk at this point on utility stocks is minimal compared to the upside. I think maybe, I don't know, 1-2% on the downside, possibly a little more, and a good 5% plus bounce on the upside. So there it is. And just to go back to what I was pointing at here or looking at here, the reason I'm not confident in calling the bottom, a swing or trend tradable bottom in the utility stocks is I don't see these divergences. These are not an absolute must for a trend reversal, but based on the chart, same thing we saw here. I think we're going to see something similar, a little consolidation. In this case, you got the bounce. You got about a 4.5% bounce, and you also worked off the overbought conditions in a sideways trading range. So that's the possibility here. The utilities may bounce around for a while, then may go on to take out that previous low. And again, I'm just looking at the Southern Company right here. And if that happens, and this is just one of many potential setups, I'd be looking for something like this, a divergent low. Watch the RSI come up, come back down, make another low, but higher than this low before reversing. You get bullish divergence. And at that point, I would be comfortable with putting some longer term swing trades or trend trades on in the utilities. So there's my thoughts. And again, to reply to January 18's comment or question on SO, I see minimal downside. I do see it setting up here on the 60-minute chart. We don't have any strong buy signals, but I would replicate this trend line right here. Use log scaling on your chart. I think that's important, especially on a stock that's fallen so much. When you have a pretty wide disparity or range between the highs and the lows on a price, I feel it's imperative to use log scaling over linear scaling. For reasons I've discussed before. It's a little too complicated to get into here in this video. So there it is. Now, keep in mind, this has the potential to work its way down. And just as in the video this morning, I cover those trend lines on the broad market saying, well, the trend is up until and unless there were, or I should say, until those trend lines are broken. Same thing with Southern Company. I can see the possibility just looking at this chart. Can see the 60-minute PPO. We are on the 60-minute time frame if I didn't make that clear. I can see that curling over, but I see the potential that any new low soon will be a divergent low, and that will probably it will have given us a little bit cleaner of a falling wedge pattern, a little more well-defined pattern. So maybe one more thrust down, maybe not. Again, the important thing is when we take this trend line out. If we take it out now, we could get another kickback rally, back test it. But price targets, let me give you some of those while I'm here. Since I picked this one as the only example we're going to look at. A couple reactions there, call it around 46.50 or so. There's some potential for a move up here. You see some reactions there. We could put up some Fibonacci retracements as well. It's always a good idea. I like when the Fibonacci retracements align. So if the bounce took place now, you can see that 38.2 fib lines up with this reaction high. So there's a potential level there, 47.24-ish. And there's that 50% lines up with that 48-ish target. But keep in mind, if we go low, you'll have to move the fibs down. So if we move the fibs down like this, let's say this one drops another point, a little over a point, down to just above 43 right here. That gives you really nice alignment here on the 38.2 Fibonacci retracement level for a bounce up to that 46.49. That would be a bounce of that's about almost 8% there. And if we took it up a little higher to that uppermost bounce target I have right now, 48, that's about 11% bounce. So there it is. Those are my thoughts. So again, I think a bounce is coming very soon in the utilities. But at this point, I just don't see enough in the charts to indicate that it will be anything more than just an oversold counter trend bounce. It might go 4%, 5%, give or take, from that level. It certainly has the possibility to morph into more, and if the charts develop and give us some evidence of maybe of a more lasting bottom, then maybe I'll extend some of these. This isn't an official trade idea anyways. It's just, again, opinion that I was asked to provide within the trading room. All right, let's wrap it up there. If you guys have any questions, feel free to drop me a line. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed.